What is going on, investors? That is right. It is a Friday. It's time to put a smile on your face, kick back and relax, because not only is it Friday, but it is the return of the FAANG stock recap show here on YouTube, where we recap all the FAANG stocks, all the news of the week that happened with Facebook, Alphabet, Apple, Amazon, Netflix, Microsoft, Google, and Tesla. We will talk about everything that has happened from a news perspective with all these companies. And then finally, we'll jump over to the stock charts as well and talk about these companies from a technical perspective, which has been very, very interesting over the last few weeks. Now, what will be interesting is next week. This is like Christmas Eve for everybody that has mega overweight FAANG stocks like I do in my retirement account, because next week we have earnings for virtually all these companies. Tesla kicks things off on 7/26. That is just 3 days from now. Microsoft is scheduled to report their earnings on 7/27. That is 4 days from now. On that same day, you will also get Apple and Google. Then finally, the next day on 7/28, 5 days from now, you will have Facebook report earnings. And finally, wrapping up all the FAANG stocks on 7/29, 6 days from now, will be Amazon. Let's not waste any more of your time. It is time to kick things off with the news. We'll start things off with Facebook. Started the week at 336, and you might say, well, did they report earnings this week? No. Facebook did not report earnings, but this stock started at 336, ended at 370. I am recording this about 15 minutes before the market closed, so these closing numbers will bounce around a little bit. But you might wonder, why the heck did Facebook go up so much? Well, that is because Twitter and Snapchat reported earnings last night. We have videos on our channel if you want to check those out, where we look at the earnings and things that happen over at Snapchat and Twitter. One of the reasons why I focus on these companies, especially when they report before Facebook, is because these are like the minor leagues of social media sites. Okay. And I'm saying that, as kind of a joke, because these are multi-billion-dollar companies and they're extraordinarily successful. But Facebook is like the Michael Jordan, the Barry Bonds, just the absolute best of the best. And so you better believe if the guys playing around in the minor leagues like Twitter and Snapchat have absolutely blowout earnings, well, everybody is expecting Facebook as well. And that is why this stock went up, because after those earnings were reported, everybody connects the dots and say, well, I guess Facebook probably is going to blow it out of the park when they report earnings next week. Now, Credit Suisse sets a street high target amid ad recovery. They are setting the price target on Facebook at $480. The stock's at about $370, so that's a big $110 more. They think that stock is heading higher. Now, a Senate bill looks to strip social media protections for health misinformation. Can you believe this? So Senator Amy Klobuchar, a Democrat, is expected to introduce these bills. Look, these bills get introduced. I don't know what the odds of this passing or what the heck it's going to have in it, but basically what they're aiming to do is if anybody posts, quote, misinformation on a social media site like Facebook, like Twitter, like Snapchat, like Google's YouTube or whatever, well, now those companies can be liable for that misinformation. And so I think this just opens up an entire ball of wax that's very difficult to judge. It's very difficult to enforce. It's just something that I think I actually know the solution to this problem. Just let people digest the misinformation, and in the comment section, allow other people to source these things, comment on these things, allow the discussion of the misinformation, help disseminate the truth. Don't get in there and try to get Twitter and Facebook to do it. I don't think that's going to end well. We'll see what happens there. Moving on to Apple, start of the week at $143, just slid up sideways to a $148. Apple is in the crosshairs. Seems like every week we're talking about with these companies, somebody in the government is coming after these guys. And they are in the crosshairs of the FTC as they ramp up repair restriction crackdown. So essentially, if you try to, service your own iPhone, you want to replace the battery, or you want to replace the screen, or you want to replace the little camera lens out of it or something, well, all of a sudden that violated your warranty with Apple and they wouldn't repair it without charging you money. Well, I guess that's against the rules. And the FTC is planning on ramping up repair restrictions that will impact Apple and makers like Google as well. Now, Apple in 2022 releases will reportedly include a 5G iPhone SE. Now, if you recall, Apple came out with this iPhone mini, which I guess is not very popular. It's kind of like an SE phone, but it's not very popular. But reportedly next year, you should have a couple models, and one will include this 5G iPhone SE, basically a lower cost iPhone, but with 5G. Apple stocks dip amid iPhone spyware concerns. This was earlier in the week, so if you had over at the chart, you noticed there was a little bit of a dip with Apple stock. I mean, it went from like 143 down to 142. Wasn't that big of a deal, but it did dip on the spyware concerns, which is somewhat rare for Apple. They're saying that this required no human interaction, so you didn't have to click on a link, you didn't have to open an app, you didn't have to open an attachment or something. It was like you didn't have to do anything and you could get spyware on your Apple iPhone. So we'll see how the company responds to that. Moving on to Amazon, started the week at $3,534. You better believe I'm looking forward to these earnings. Ended the week around $3,656. Amazon's job posting signals potential plan to accept cryptocurrency. Now, they put out a job description. It says the payment and acceptance experience team is seeking an experienced product leader to develop Amazon's digital currency and blockchain strategy and product roadmap. So we'll see what happens. And it would make sense, though, that Amazon does do something in the crypto space, okay, where they accept it or they do something with it. Maybe they even become like an intermediary, like a Coinbase or something like that. I think that would be an interesting spot for Amazon to play. Like, do exactly what they've done in e-commerce. Slash the fees, increase access. Maybe if you have a Prime membership, you get all kinds of free transfers, those types of things. I think it'd be interesting to see Amazon disrupt that business. UPS is looking to enter same day, not overnight, but same day delivery to compete with Amazon and FedEx. But what's interesting about UPS is their drivers are unionized. And because I run, you might see that my office is a mess right now because I'm stocking up on things for Christmas. If you run an e-commerce business, you stock up now for Christmas and then you basically sell the rest of the year. And so I've been talking a lot with my UPS drivers. So it's amazing what you learn from them, but they are unionized. And so UPS drivers are unionized. FedEx tend to be like a third party similar to Amazon. They might have some forms of unions, not at Amazon, maybe at FedEx, but for sure UPS drivers are unionized and they will be against more workload. I can tell you that just from my anecdotal experience. They are overworked already, so they are not going to look to work even harder, but they are not going to allow UPS to basically, hire independent contractors to start delivering same day, similar to what you see with an Amazon, a FedEx, like Uber delivery, those types of things. Those are all independent contractors. Because UPS has unionized drivers, they're not going to allow them to do that. And so it'll be interesting. Analysts expect that UPS will make an acquisition in the same-day delivery space, so that'll be interesting to see how that competition heats up. Moving on to Netflix, the one FAANG stock that has reported, and you see it that the stock slid down from 526 at the beginning of the week all the way down to 516. So we'll talk about that from a technical perspective. Short list, though, Netflix just stayed in its band. Okay, when we get over to the stock chart, if you're familiar with our analysis of this thing has just been in a sideways band for a while, and it looks like it's going to stay there, at least for the time being. Netflix sells off against post earnings down 4%, but analysts see blue skies. So this is essential. If you want to see our Netflix video, I did a 15-20 minute video on Netflix where we went through all the subscriber numbers and things like that. I think the most interesting takeaway is United States and Canada subscriber growth was actually negative. So Netflix actually had less people here in the United States and Canada subscribe to Netflix than the previous quarter. So growth term negative, and it's just the same narrative that we've been saying here on the channel for a long time now, is that Netflix's user growth has stalled out here in North America. And you could probably say the same thing to a certain degree for maybe like Facebook's growth rate, those types of things as well. Now, Netflix reports new subscriber growth, but Outlook hints at challenges ahead. This headline is a little deceptive because the vast majority of Netflix's subscriber growth, actually, I think off the top of my head, came from Latin America. And so, yes, they are growing subscribers, but the vast majority of it is in countries where they're not able to charge as much as here in the United States. I think the average revenue per user in like Latin America is half as much or more than half as much off of what Netflix can charge here in North America. So those are things that you want to keep in mind when you see those types of headlines. Moving on to Google, start of the week at 2,496. And is there a broken record in here? We could just replay the same thing with Google. It is up again, up again, up again. And you imagine when we get over the technical chart on Google, it just still looks absolutely phenomenal. Now, Alphabet or Google gains ahead of its earnings as Credit Suite sees 29% upgrade. So here's the deal with Alphabet. They also saw this gap up yesterday when we saw Twitter and Snapchat report their earnings. Facebook and Google, which are the market leaders, are naturally going to go up. Okay, you can do this in other sectors as well, but I think it's the most predictable in online advertising because, the money just flows to the top of online advertising. If you have a big advertising budget, you're going to allocate a ton of it to Google and Facebook, and the rest is going to get sprinkled out through Pinterest, Twitter, and the rest. Okay. And so if Twitter and Snapchat and those types of sites are doing really well, guess where a ton of money came in from an advertising business? Google. Okay. And I say this from experience. I run an advertising business where I'm spending $15,000, $20,000 a month on ads myself. And so while that's fairly large for a one-man operator, I'm just saying anecdotally, I understand how these things work. I am speaking from experience. Now, Credit Suite's new street high target is 3,350 for Google, which currently is sitting at about 2,600 and some change if you're looking at the GOOGL ticker. Remember, there are two of those. Now, broken record again. President Joe Biden nominates Google critic Jonathan Cantor for top DOJ antitrust job. And I got to read you this quote. This comes from Senator Elizabeth Warren, who is a Democrat from Massachusetts. She says, at this critical time, the DOJ must be equipped to take on giant tech companies and monopolistic corporations in a sector that ... Jonathan will reinvigorate antitrust enforcement, both civil and criminal, and strengthen the DOJ's scrutiny of the anti-competitiveness abuses that threaten our economy, our society, and our democracy. And so you got to love these politicians. That's an absolute all-time quote there from Elizabeth Warren. We'll see what happens here. Okay, I've actually got another news story that I'll get to in a second, but I think you're going to see that the headlines on these and the big talk by these senators, I think it's not necessarily going to be followed up by like really, really, really big action. We'll see what happens here in the future. Now, moving on to Microsoft. Start of the week at 279, end of the week at 289. This one really popped up nicely as well as we head into Microsoft's earnings week. Whenever we talk about Microsoft, and I'm sure we'll talk about it next week on their earnings, they have just a pile of cash just sitting over at Microsoft. So they are doing smaller acquisitions, okay, because of this, some of this DOJ stuff, some of this regulatory stuff. They're not going to be able to do like a TikTok deal. The TikTok deal was obviously very difficult, and there was a lot of other stuff that's difficult for Microsoft to pull off. Really, all these companies outside of maybe Netflix or something like that to really pull off. But they're pulling off all these smaller deals, and I think that is a wise strategy considering how much cash most of these companies has, but in particular Microsoft as well. Moving on to Tesla, start of the week at 629. You can imagine the news is a little light around these companies because we're on the eve of earnings, right? Okay, so when you're on the eve of earnings, news kind of tends to quiet down because if you have anything, you tend to want to save it, or at least in this period, you're kind of quiet. You're not really making a lot of news. Tesla, on the other hand, did make some news this week. Started the week at 629, melted up a little bit to 644. Their Q2 earnings, obviously coming in next week, but are pretty well telegraphed because they announce their delivery numbers, and they even break it out like China numbers. They break it out, and they break it out by the Model S, the Model X, the Model Y. You know the price of those units, those types of things. Analysts have gotten very good at predicting what Tesla numbers will be. And so that's why Tesla earnings have become a little bit less about the numbers, the profit, those types of things. That used to what drive Tesla. Like if they had a less than expected, loss, or they actually made money in a quarter, sometime it would swing the stock. And I'm not saying that has gone away, but it's gone away to a certain degree because analysts have gotten very good at predicting the kind of revenue that they're going to do. Now, earnings per share is expected to come in at 98 cents. They expect the revenue to be at about $11.4 billion, which is up 88% year over year growth on that one. And gross margins for the automotive side expected to be 26%. I don't know if that includes regulatory credits or not, but if it doesn't, that seems pretty high, actually. So we'll see if that materializes. Tesla ramps up its hiring effort on expectation for higher demand. So they're going the part-time route. So they're hiring people part-time with almost like, on probation to a certain degree. I guess that's maybe the way you would say it, is they're hiring people part-time, but with a path to become full-time sales and things like that. And so obviously the Model S, the Model X, the two high-end cars, those cars kind of sell themselves. Even the Y and the Model 3, those kind of sell themselves as well. You got the Cybertruck, which I'm on the pre-order list for, and my wife keeps asking me when it's going to be, and I keep telling her, well, Elon Musk said they're going to start delivering them towards the end of this year, so it probably means at the end of next year at the very earliest. We will see that. We'll see if Tesla is able to deliver a car on time. Tesla strikes nickel supply deal with miner BHP. This was actually a pretty big deal because you need large amounts of nickel to make batteries. And I remember Elon Musk, he actually tweeted a while back, hey, is there any miners out there of nickel that want to make a deal? And it looks like, I don't know if that tweet had anything to do with it, but he did strike a deal this week, and that should keep Tesla cars on the road even more than they already are. So moving on to from a technical perspective, we are going to pick things up with Facebook. And here's our big monster move. After Snapchat and Facebook reported, I'm confusing all my social media sites. Snapchat and Twitter reported their earnings, and so Facebook did a nice little pop, and we'll see a similar action with Google. And so we're up here with Facebook, and this trend line is intact until it's broken. We'd have to get below 334, which is like $40 off of where the stock is right now for me to even think about this trend, even have it be a thought that this uptrend is not intact. And we'll see what happens with Facebook. It could be that because of the Snapchat and Twitter earnings being so good, a lot of that push forward some gain with Facebook. It could mute the gain that they see next week. So I wouldn't necessarily be sitting here playing a pop in Facebook next week unless their quarter was just, everybody's already expecting it to be great. And for them to exceed those expectations, they certainly possibly could do that, but I could see potentially they just kind of meet those high expectations. Apple, similar type thing. We're still locked in this uptrend. We're just above where we were, all-time highs on 145. We talked about breaking above 145. I think Apple earnings could send this stock one way or another, okay, because these candles are getting really, really shallow here. Volumes picked up just a little bit, at least over the previous week. We'll see if earnings can continue this momentum. If we break 145, we're probably coming south of 138, 139 on that one. That one could create a buying opportunity. You get past 138, you get back into this zone down here between 119 and we'll call it about 130. Excellent buying opportunity, in my opinion, for Apple. Amazon's looking almost identical to Apple. We channeled sideways for the longest time. We popped up above the all-time highs, pulled all the way back, and then kind of continued on. And same thing with Amazon. Next week during earnings, they didn't necessarily get that bump. I would expect them to do well in online advertising on top of their e-commerce business, and obviously AWS as well with the new CEO. Obviously, Jeff Bezos is more busy going to outer space than he is running Amazon anymore. In fact, he's not doing that anymore. I would expect Amazon to try to keep the good times rolling. The last thing Amazon wants to do is have Jeff Bezos walk out the door and the share price start to decline rapidly on Amazon. So if it stays above these all-time highs, you could get a nice little run with Amazon. You break below 3,500 on the dot, you're coming back down into this sideways consolidation area, and in my opinion, probably a buying opportunity for Amazon. Moving on to Netflix. This thing has been channeling in the same pattern for a year. Feel like we've been, for a year we've been doing this show, I think. And we started about $480 per share and we go up to about $560. So you got about an $80 trading range. When it's down here below $500, it is a buy. When it is up here above $540, it is a sell. It is as simple as that. And so we're coming down here with Netflix. If you want to do this options wise, I mean, the stock price is kind of expensive. So I would assume the premiums on the options are pretty expensive. Maybe they have mini options on Netflix as well. I think they do with Amazon. But you come back down here, you could make an options play. You could make just a straight up play onto the stock. I don't really care. I would trade Netflix since this is such a, this has been going on for a year. Now, again, if you set up that type of trade, you have stop loss, and that's really all you got to worry about. You know, you're coming in here trying to buy it close to 480. If it drops below 460, look, it's probably going lower. And you trailing stop as I think you get above 540. You set a trailing stop because this thing could blow out, just like Amazon, just like Facebook, just like Apple, just like Google, Microsoft. When they break to all-time highs and they break above it, these things can run, and I'd like to let my winner run on that. Now, Google, the most sophisticated technical analysis you'll ever see here on YouTube. Guys, this is an uptrend, and it doesn't even look close to being broken. You'd have to break below, way below, and look, they've got earnings coming up next week. We'd expect them to be blowout considering what Twitter and Snapchat did. Look, this stock is in an uptrend until it's not. There's not much else to say there. I mean, really, it's Friday. I'm not trying to waste any of your guys' time. Here's Microsoft. This thing's looking really good too. Okay, yeah, it's kind of steep right here. As we head into earnings with Microsoft, you get any pullback here. You're really looking for a break below 275. That would probably pull us back into the 260 range. That could potentially be in a buying opportunity. What we're going to see with all these FAANG stocks is exactly what we saw back in March, right? Okay, what happened is we saw in March, big drop in these stocks. Then they did a big monster leg up. Then what did they all do? Pretty much all these stocks traded sideways for a long period of time. Some of them are still trading sideways, like a Netflix. Some of them are still trying to figure out if they're going to break out, like Apple and Amazon. But they traded sideways, and then they go on these big monster moves. But then what's going to happen? Microsoft is going to peak out. So if you're worried about trying to come in here and buy these stocks again, don't worry. These stocks are going to do this again very soon. I don't know when, but this is what's going to happen with these stocks. They're going to make a big monster run, and then they're going to chop sideways for a while. That's what these FAANG stocks do. That's why I like owning these stocks. That's why I love owning these stocks, but I like buying them on the dips of sideways consolidation, okay? And then if you have an event like March, obviously you're coming in here, you're unloading as much money as you possibly can into names like this. Now, moving on to the last stock of the day is Tesla, doing something a little bit different, okay? We kind of channeled down in a wedge here. We kind of came up. It's lining up perfectly for 3 days from now when Tesla reports. It looks like to me this stock wants to go one way or another. This trend is shallowing out a little bit. This looks pretty bullish to me. You're looking for a break above 700 on this one. You break above 700, you're coming probably to 750, maybe even a little higher than that. You get above 750, 770 on this one. All-time highs back in play, 850 to 900 with Tesla. It's really as simple as that. Now, if you break below here, I think you're coming down to 550 on this one. A pullback to 550, it's starting to prove to be, I don't want to say a critical area, but you see volumes drying up in Tesla as well. And it's because everybody's looking at this chart and they're like, well, they're just like me. People sometimes make comments, and I think it's kind of funny. They're like, well, you think it's going to go down or you think it's going to go up? And it's really, I try to be a little bit more specific than that here on the channel. But honestly, with Tesla, Look at the volume down here. I wish I could zoom in, but down in my cursor, look, these are tiny, tiny little candles of volume here with Tesla. The volume of people trying to buy Tesla shares have just shriveled up because exactly what I'm saying. Traders are looking at this and saying, well, we got to get it above 703. They'd be interested 703 and higher on this one because then they could play a momentum trade up, back, potentially up to 850 and higher. Or they're waiting for it to break down, probably below about 600 on this one. You break below 600, then you're probably coming down to 550, and you could play that trade. But right where it's at is really just indecision, okay? It's right in the middle. It's not telling you one thing or another, and that's why volume, to a certain degree, has shriveled up in Tesla. So hopefully, guys, enjoyed this video, and you enjoy your weekend. I'll see you again next week. It's obviously going to be a huge week here on the channel, so I'd appreciate it if maybe you hit that like button, that subscribe button, and maybe share the videos as much as you possibly can. We put in a lot of week, or really I put in, there's no team here, okay? I put in a lot of work these weeks, and I have a great time doing it, and I appreciate all you guys tuning in. So I hope you have a great weekend, and I'll see you all soon.